Over the year, egg prices have increased 70%. Orange juice prices have also increased 30%. Your breakfast is becoming more and more expensive, and now we have a dozen of eggs worth more, costing you more than a pound of ground beef. What's going on? Well, according to this article, and according to, if you research a little bit about this, and according to the recent articles about eggs in particular, that you're seeing the high prices of eggs because of the avian flu, because of low supply of eggs, thus the prices are going up. There's demand for it, people still need it to eat for breakfast. And then what about the issue with oranges? Is the avian flu also affecting orange juice? That doesn't explain the shortages with orange juice. Well, with oranges, the argument that they have is that, hey, a lot of hurricanes last year came in, so thus there's less oranges, thus the orange juice prices are higher. But nobody's talking about the real issue of inflation, the real issue of all these prices moving up, food prices moving up, and everything's moving up because, transportation to ship these things, finding workers, the issue with the unemployment rate, which is really low, trying to find labor, wages going up, the cost is going up to produce these items, especially in the commodity market. And no one's also talking about the whole supply chain issue as well. Supply chain issue after COVID completely disrupted the way things are going, the way how prices are being implemented in grocery stores and around the world, globally, China, US, Canada, you name it. Yet, we blame the avian flu and the hurricanes, and don't worry, things will get better. Although they may have an effect in some of these prices, but the big underlying effect that I would argue is this whole supply chain disaster, this issue with the employment, wages moving up, which is going to be costly. If you run a business producing eggs or oranges or anything, and to ship it's going to cost you way more, and your materials or your factory, or paying your workers, or even your machines, or getting even maintenance done, it's all going to be costly. So who are you going to pass the cost to? You're going to pass the cost to the end consumer, which is you and I when we go and buy these groceries, the eggs, the orange juice. And let's not forget that that's only from the manufacturing, the farmers, the supply side. We're not even talking about when it gets to the retailers, the grocery stores, what happens then when a lot of these grocery stores and retailers also up their prices and do so because they're facing also a cost issue. And to couple with that, let's not forget the demand issue as well. This situation is going to get worse off because now you're in such a situation where inflation is affecting everybody. The money in people's pockets are going to be affected. Thus, there going to be less demand, less people buying. Although, people still do depend on many things. Like, for example, if you need to eat, you need to eat. You're going to buy food. You're going to buy certain things. But you're also going to look for alternatives. Well, an alternative might be now ground beef, a pound of ground beef, which is cheaper than eggs, a dozen of eggs. Maybe you'll start cooking that in the morning instead of your typical eggs and oranges in the morning, right? So a lot of this that you're seeing, and with the CPI report also, and the equity markets in la land, the stock market's going up, like as if everything's fine. Fed coming out, other Fed members as well coming out as well, saying that we need to do more. We also had Harker come out and basically say that, hey, we're going to have to hike rates maybe above 5% for a while, utilizing 25 basis points increment. What does that even mean? Right? You could take that in many ways. I mean, some people can interpret that, hey, you could be getting 25 basis point rate hikes almost at every meeting, and we could get to 6%, just like how we were raising rates at every meeting in 2022, but this time at a shorter, smaller pace. They haven't thrown that out of the window, right? That possibility is still there. And of course, there's a possibility of the pause and the rate cuts, which the markets are expecting, which is why the markets are in la la land. But then when you get the inflation report and the CPI report coming in higher than expected, especially the headline number coming at 6.4%, and it still is not down to where the level where the Fed wants, which is 2%, guess what, right? It makes sense when you hear articles that egg prices are going up, orange juice and whatnot, and other prices are still elevated, still going up, which is definitely going to affect the consumers. But retail sales also came in hotter, so what's going on? Well, the retail sales component might be hotter because it's not maybe considering the inflation effect. Growth is looking strong, possibly because of the inflation effect. People still need to spend. You're still going to fill gas in your car, whether gas prices go up or down. You still need to get to work, right? So it's still having an effect in the economy. You are seeing a lot of areas, especially food at home, food outside, food at the groceries, definitely is going to have an effect, pinching the consumers, which basically means one thing. What Harker was saying makes pretty much sense, that, hey, continue to raise rates until this number really starts to come down or until something breaks. And maybe until something breaks, then yes, you could get inflation lower. Let me know what you guys think. Leave a comment below, subscribe, hit the like button and the bell icon to be notified on the next video. My name is Daniel. You're watching Infovest. Hope you enjoyed it. Thanks. Bye.